My name is Willy Murugi. I am an assistant tax manager, tax department in Thornton, and I've been in Thornton for the last 6 years now. So the tax highlights for the 2019-2020 budget, I'd like to cover those in 4 areas. So we would have income tax, VAT, excise and customs. For income tax, looking at the withholding tax, the Cabinet Secretary proposed to increase the applicability of withholding tax by adding more services in addition to what we already have currently. In terms of withholding taxes, they've increased the number of services which are subject to withholding tax, in addition to what we currently have. Just to give a few examples of the services which have been included, we have cleaning and fumigation services, security services, catering services, and we also have transportation of goods, which is also being included. And this one would include international air transport. So just moving on, there's also the capital gains tax. Initially in the budget for 2018-2019, there was a proposal to increase the capital gains tax from 5 to 20%, but this one did not come out well, and that one was repealed. So in the new budget, in the current budget 2019-2020, they've increased the capital gains tax from 5% to 12.5%. The Cabinet Secretary said the move, was actually seen to increase, to just be in the same line with other jurisdictions. When you look at other jurisdictions, the capital gains tax goes up to high as 20%. The main point, probably what many would actually look at, is the VAT refunds. Currently, we all know KRA is known for actually keeping a lot of refunds for people, and probably because of lack of funds and the rest of the things. But the Cabinet Secretary proposed to actually have most of the refunds which have been approved to be paid within the next 2 months. We hope that he'll keep the promise, and most taxpayers who have their refunds tied at the authority will have them paid out as soon as possible. So just looking at other VAT highlights, we also have exemption from VAT on agricultural pest control. Although we would look at these as being an incentive, really, exempting products from the past, we've seen it, increasing the prices, because as a supplier of this particular product, you tend to, take in the burden of input when you buy some of these supplies. So in terms of producing, the cost is then, transferred to the final consumer of this product. So the product, yes, is exempted, is an incentive, but then again, the prices are likely to go higher. So even if it's a welcome move, we also need to look at, the prices of these particular items. Also, just looking at VAT, there's also now a clarification on exported services. So there used to be, a bit of a confusion exactly what is an export of a service, but now this is clarified, and you would see that when looking at what is an export of a service, would actually be looking at it from the perspective of, who is the consumer, who is the final consumer of this particular service, and where is it being consumed. When the government introduced the excise duty on betting at 10%, they saw it as a move to actually reduce the negative effects it has on the young people. But then again, this is also affecting the betting companies, the bookmakers, who are actually giving platform for these young people. Over and above the huge taxes they now have the burden of excess duty. Yet for most of them, they've not been probably able to, 100% implement what has already been introduced of late in terms of the betting taxes. Adding on to the excess duty, the government proposed to increase excess duty on wines, spirits and cigarettes and tobacco. So some of these products which probably the government has seen is having an adverse effect on the consumers. The government proposed to reduce withholding VAT from 6% to 2%. It is a welcome move, because when you look at it, withholding VAT had a negative cash flow impact on most of the companies. So reducing this to 2%, we're really going to push through for most of the companies. Yeah. So in terms of increased taxes, it's basically excess. That is what is going to be increased, and what the government sees as products which might have a negative effect on the consumers. When you look at the budget proposals, tax proposals that have been made, most of them are probably to increase or widen the tax base for the Revenue Authority. They are at a pressure currently because now they need to meet the 3 trillion budget that has just been read out. So a lot will need to be put in by the Revenue Authority to ensure that they collect more taxes.